Everyone. Tonight I will be talking about swing trading into profits, trading 10 minutes a day, or sometimes even less than that. So is that possible? Is that feasible? Well, I will show you. It is for me. Before we begin, let me remind you that all information provided today by TradeOutLoud and this webinar is for educational purpose only. It should not be construed as investment advice regarding the purchase or sale of securities, options, futures, forex, or any instrument of any kind. If you guys want to get a hold of us, our website is TradeOutLoud, and also you can get a hold of us on TradeOutLoud handle on Twitter, Facebook, YouTube, or LinkedIn. And on Twitter, I'm going to show you guys a little later. I do post a lot of trading ideas before they happen. So if you are one of my Twitter followers, well, you would have known that you could have been short the market today. All right, so my name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade and swing trade the futures and the equities market. I've been doing this for 18 years, and I day trade futures for about, I would say, roughly 3 hours a day. Because it takes a little prep time and a little wrap time at the end. And I literally spend probably around 10 minutes swing trading a day. And that's about adjusting positions or even finding new positions. Prior to becoming a professional trader, I come with 10 plus years in investment banking, and I run a swing trading service for stocks and ETF since 2010. So this is our 11th year. And I also run a trading room, futures trading room since 2017. And we do offer trading education for swing trading and day trading. And we do specialize in high velocity moves. So we try to find inflection points from which the price can literally find that energy to burst higher. I'm the designer of a proprietary trading system that is based on price support resistance, specific trigger times, specific price zones, chart synchronicity, and divergency. And what a better example today, because we did have a lot of that in our market, divergency. We had NASDAQ with relative weakness, and we had Dow with relative strength because the Dow stocks were incredibly strong. And I could give you some examples of the stocks that were strong. 3M, JP Morgan, Citi, Bank of America, they all made new highs today, and especially Citi, which made a new high for the year. JP Morgan, new high in the year. Can you imagine NASDAQ just making low lows? Amazon making a new low, Google making new low, Apple is looking weak. Where not financials pretty strong today. So it's just a matter of finding where the rotation, where the money is rotating into. All right, so here's our agenda for today. We're going to talk about swing trading. We are also going to talk about investing, and we're going to talk about whether swing trading is right for you or not. I don't see any reason why. You don't need a whole lot of money to get started in swing trading, and swing trading is something that I want to dedicate my career into in a couple of years. So I want to, I still have some programs into day trading, and I still run a day trading room, but I don't want to do that my whole entire life because I just want to enjoy life, and I only want to trade 10 minutes a day, right? This is where you need to start learning trading stocks, trading. If you don't want to spend a lot of time in front of the computer, I'm going to share with you why I like swing trading and how to spot an opportunity in any market condition. Because even in a market like this, we did make some money in stocks that were going higher. You can still short stocks. If you have an IRA account or a Roth IRA account, obviously you cannot go short in those accounts, but there are still plenty of trading opportunities. And you could actually use inverse ETFs, and you could still go long as the market is going short. All right, so let's begin. Swing trading is the easiest trading style to make money. Ooh, I believe that you may not have believed that, but yes, it's true. Swing trading, and it's easier to make money in swing trading because you're sidestepping the algo noise, and that lives on smaller time frames. So you have to be exceptionally good to make money day trading. But you don't really need to be exceptionally precise. I didn't say good, but because you need to be good, but you don't have to be specifically precise when making money in the swing market, because you're dealing with higher time frames, you're giving a lot more wiggle room to your trades, but you definitely need to know and respect the rules of the game. Like with any game, you need to respect the rules. So swing trading is the sweet spot between day trading and position trading. It was out there, invented by hedge funds, right? So you had day trading, and a lot of institutional traders were day trading before. Now day trading is 80% done, I would say 85% done by algorithmic trading. So institutional traders do not want to have any kind of headaches into those particular, into the market and into that specific style of trading. Most of the institutional investors are geared towards position trading and investing. They're looking at the core value of the stocks. They're looking at potential future moves. They do have a wide time horizon into the target areas. And then of course there's that little sweet spot in between, which is swing trading, which I absolutely love, because swing trading generates high probability trades and it offers the best chances for success, best return on investment. You take it out on a rotation. I'm going to show you some examples. And on the next rotation, let's say the price going up, and boom, when you see a next rotation happen, you're out. So you have captured the sweet spot, the core of that beautiful move. Swing trading positions will be held from 2 days, well, to a couple of weeks. However, depending on the market environment, there may be some swing trading positions that may be held longer. So I have in my portfolio right now, I still have some positions that are actually one swing position that was open in January, and I still have one that is long term. But one position that is open from January, I still have a couple of positions that are open from February, and that is because the market did not advance as fast. So as long as the stop is not being violated, and as long as your trade has not reached the destination, has not reached the target area, guess what? My hands are tied, right? And the trade is on autopilot. So swing trading positions, like I said, will be held depending on market environments. We have had trades, for example, we do have an investment trade, a core trade it's called, in Airbnb. So we picked up Airbnb and we hit targets, believe it, we hit long-term targets in 3 days. So we had targets that were supposed to hit in 1 year to 2 year span in 3 days. And of course we took profits. We scaled out a mass proportion of it, but we still have skin in the game, and we're going to look to reload into the next market cycle. Because when you swing trade, you need to understand the market cycles, okay? And if we have time today, I will explain to you what and how those market cycles are based on charts. Okay, so swing trading focuses on time frames that are 1 hour, 4 hour, daily, and weekly. These are those core kind of time frames that they influence the smaller time frames for day trading, but they also influence the higher time frames. So first, you're going to see a trend reversal or a trend initiation on these swing trading time frames. And then after a day or two, or even a couple of weeks, they transfer the energy and they rotate translate into setups and continuation patterns onto the higher time frame. So you can get really early entries based on these smaller time frames. Guys, I've been doing this for over 25 years. So I've done this institutionally, and I'm doing this now on my own. Position trades, which means long-term trades, will be held from a few months to a few years. These are stocks that have really good fundamentals. We're going to talk about blue chip stocks and all that stuff. These are really good potential holding position type of stocks. It focuses on higher time frames, weekly charts, monthly charts, quarterly charts, annual charts. And you're going to be finding technical patterns onto these charts that support continuation higher. Now, I know that, and I believe that, if you're a little bit more of an educated trader, I do have friends that are just getting into investing. I do have a lot of individuals that say, call me and say, hey, I want to buy XYZ. What do you think about the stock? Because I want to buy it tomorrow. And whatever I tell them is that, hey, if you know a little bit of technical analysis, put it to work, because you do not want to buy it into a stage 3 into the market. A stage 3 is a topping stage, and it's very easy to recognize whether the stock is topping or whether the stock is bottoming. I'm going to show you on charts exactly how that is. And you know, the technicals that you need to have, and it's not complicated. It's actually super simple. I have an indicator for that, and I have price action that is going to help you. And you guys are going to leave this webinar knowing how to read oversold and overbought areas in the market. It's not complicated. So swing trading and investment captures a portion of the swing from high to low. But the investment portion doesn't necessarily refer to that very low or that very top, because when you decide to get into an investment position, you can buy it at any time. And like I was saying earlier, if you know a little bit of technical analysis, you will wait for a market stage that is better, that is going to give you a better return for your investment. And everything is based on technical analysis. So if you guys have watched CNBC, you know, even 3 to 4 years ago, you would have heard Kramer, you know, say, hey, you know what, fundamentals. He would invite a lot of CEOs. He would talk only fundamentals about the stock. And that's not that far away, that far ago. I mean, if you think about it. But now, guess what? He is just talking about technical. Why? Because of algorithms, because everybody went technical. Hedge funds are technical right now. Hedge funds were fundamental as well. Institutional traders were fundamental. Now they're technical as well. So swing trading is not about capturing the entire trend, because that is pretty much investing. And in investing, you can take a decision whether you want to get in here or wait for a pullback, or just play novice and say, hey, I don't know anything about the market. I want to invest in Kellogg's. And you just jump in Kellogg's, and, you know, you just, you know, probably if you have a time horizon of about 20 years, then you're going to look at Kellogg's in 20 years, because you have no interest. You want to allocate a portion of your nest egg into the stock market, because overall the stock market has been progressing throughout the years really well. And there's always, I mean, think about it. The real estate market is literally like, I live in Boca Raton, Florida right now. And everything, like if you are in the house for a market, and if you see a listing for, I don't know, $1 million, that listing, you're going to have a bidding war on that house. So everything here is a bidding war. You know, obviously there are a lot of New Yorkers, New Jersey that is coming down here. Massachusetts, like you should see the license plates around us. Like everything is like New York. Like you blink and you go like, okay, where am I? Okay, so swing trading is a simple strategy where you enter a trade when the price breaks above a pullback reversal pattern or breaks above a range. So there are two simple strategies that you apply to swing trading. Obviously, you can use a plethora of trading strategies that we also teach in our courses, such as gaps, that are really great to apply. But if you want to keep it like super simple, you're going to have to focus for pullback scenarios into key locations, inflection points, rotations from that point on, and room to run extension for higher. So the key is to know how to enter upswings and downswings, and identifying the sweet spot, banking the profits before the market turns around. This is what it's all about. Swing trading is that sweet spot. And this is what I do. I go in a couple of days, a few weeks, and I'm out. Elements of the trades are the entry, the stop, targets, and share sizing. These are the most important elements. If you know how to answer these questions, where is my stop? Where's my entry? Where are my targets? And I need to share size for this trade, then you know how to put in a trade. If you're missing one of these elements from your equation, your trade is going to go sour. So when we're looking, for example, this is a pullback and an ongoing trend. Pullback and ongoing trends, they're always going to be short-lived, and you don't know how steep or how shallow they're really going to develop, because towards the end of the trading season, the earnings season, like where we are right now, we are definitely looking at a much more choppier type of market. If you have happened to look into your portfolio, At the end of each quarter, like March, June, September, and December, you're going to see that in these specific months, your portfolio is not really going to shine how it shined at the beginning of earnings season. Am I right? I think if you do look at your portfolio, you're going to see that, hey, she's kind of right. And that is because there's a lot of chop going on into the market. There are a lot of things that are happening at the end of the quarter. One of the things that is going to happen next week is that the futures contracts are going to roll over. What that means is that there are going to be two contracts active. The current contracts, because they expire onto quarterly cycle. And then I'm gonna circle back and share with you why this happens and why the stock market is going through the same transition, because this is exactly what happens at the end of each quarter. So I'm not kidding you. So pay attention to this and know when to time your trades. And you know that in the latter half of the quarter, you shouldn't push the pedal to the metal. You push the pedal to the metal when you begin earnings season. That's when you go full throttle on, okay, January, February, and as you're heading towards the end of February and into March, you kind of like take your foot off the gas and you try to hit the brake pedal again, right? And a little bit. Trading is going to be very gyrating. It's going to be fleecy, flaky, messy, all over the place, because like I was telling you, there are going to be two contracts. The current contract that is trading right now is still going to be trading until the 19th. On the March 19th, so we're literally 2 weeks away from that, it's going to be the quadruple witching option expiration day, which is going to be chop, 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 chop. Okay, so it's going to be literally chop suey out there. Remember, we had the same thing in December. Into the same timing. It always happens in the third Friday of the quarter, and that is when you can experience maximum gyration. Typically what happens is that as you're going into, as with all option expirations, but this is the heavy duty one because we have the futures and futures options that are going to expire and futures contracts that are going to expire. What happens is that within that week, price is going to remain sideways, and it's most likely that it wants to pull back. So you can see the pullback now. It's most likely going to continue into the chop and pullback phase going into next week. And then as we're entering from the 15th to the 19th, hear me out, write this down on a piece of paper. It's going to go sideways. It's going to go down towards the 17th, maybe 16th, maybe 16th, but 17th, and then it's going to go back up on the 19th. Okay, and also remain sideways towards the end of the day. That's what happens. So we know price action reaction. I've been trading, like I said, for over 25 years. I know what's happening in the market. I could write an almanac myself. So the key is to know to enter these upswings and downswings, but the key here is to know exactly where these inflection points correlating with the market, with where the market is at that certain point in time. Okay, so who is swing trading really for? If you have a busy lifestyle and you want to manage your own long-term money or trading accounts, trading is for you. Okay, part-time trading, because it doesn't require you to be in front of the computer. So if you have a full-time job, or even if you have a part-time job, but you do not want to look at a computer all the time, swing trading is for you. Excuse me. Swing trading and wealth generating style of trading, and just like investing, require a little bit of time, but not full time. So you can unchain yourself from the computer. You only do a little research, or if you decide to join a program that finds trades for you, you just follow along. The best part about this is that you can work from home and you can make your money and long-term money work for you. Sorry, I just have a really dry throat. Okay, so it takes a proven strategy to select winning trades and investments. So you really need to have it down and know technical analysis in order to identify these really good patterns. The stocks need to be fundamentally sound for long positions or medium-term trading. Because if you want to trade your IRA accounts, you want to make sure that you enter into positions when the price is ready to trigger, when it's really into motion. Remember that an object in motion tends to remain in motion. So once it goes up, it pulls back a little bit, then it rotates and goes back up. Fundamentals have to be in line with technicals, like I said. So buy stocks on sale. What does that mean? Buying stocks on sale, it means that every single time you're getting a pullback in the market, that is prime time for creating that list. I love down days into the market. And I know, exactly, Daniel, buy the dips, okay? Buy the dips. So here's the thing. If you have been having your eyes on a stock and say, gee, I don't know, because here's the thing. There are trades that you're always going to miss. For example, I was watching the semiconductors a couple of months ago, and I missed 2 entries in semiconductors. I also run a trading room, and when I'm in a trade, for instance, in those 2 hours, I cannot focus on the stock. Excuse me, I cannot focus on the stock market. So what I do is I have my trades on autopilot, but after, then I see that, oh, SMA triggered. So I missed SMA a few times, 2 or 3 times, I think. So what do you think I'm going to do when the market pulls back? I'm going to have my SMH finally make it pay for me. So I am going to look at these pullback spots. So whenever you're having the pullback that reaches some kind of support spot, that is going to be a prime destination for us. And it's going to be a prime location for us to engage into a trade. So make a shopping list. As the market is pulling back, see it as a buying opportunity, because that's what I love. And then again, you can short it a little bit along the way. So, and don't forget that as we're entering March is typically bullish is typically seasonally bullish for NASDAQ. So it starts with the first week. It starts with the 3rd week of March. So that puts it in line with our tempo from quadruple witching option expiration that happens on the 19th. So when to buy? When certain events happen in the market, these events create pullbacks. The pullbacks make share prices go lower to a level that becomes appealing to the buyer. It's the happening place, right? Instead of paying that MSRP price, right? That you go to a dealer, you want to buy a car, you go inside and say, hey, what is the best price that you could give me this vehicle for, right? Same with stocks. You don't want to buy, for example, Amazon at 3,400. But once it pulls back, let's say to 2,900, maybe that's a really good price. That's a really good deal. So always look for deals into the market. So what are these events into the market? Well, of course, it was the dot-com bubble, right? It was the 2008 financial crisis. It was the 2016 election, and actually it was a little bit before election because there were some stats that were really lining up. For example, I have shares in NVIDIA at $34 from March 2016. Yeah, from March 2016, and I have that position as the core in NVIDIA. NVIDIA right now is trading at $512. I'm an investor in NVIDIA, so for me, it really doesn't matter that it pulls back from 600 to 500, because now when it gets to 500, it's going to probably rotate again. So I'm always adding to this, to my position in NVIDIA if I want to, but based on a much higher time frame. So I'm mostly looking at quarterly charts, monthly charts, so really, really higher time frames. And of course, another massive opportunity was the 2020 pandemic. That was another great opportunity to leg into positions, because, for example, USO, right? USO was trading at $4, then it had the 8-to-1 split, but I bought it at $4 when it was, remember when oil went negative? So you have opportunities into the market where you can buy. You don't have to buy a whole lot. You could start out, and especially if you're investing, you have to divide your portfolio at least into 5 lots, because you have to give room to your trades. Focus on companies that have thrived and survived over the years. I don't trade anything that I do not know. I do a lot of research on the stocks that I get in, even though the technicals, are good. And I know some traders don't pay attention to that, but I do pay attention to the technicals. I mostly like the S&P stocks. I like the Dow stocks. Dow stocks have a good reputation for investments, for really good investments. So do I need these events to get in? Well, yes and no. Not all the time, because pullbacks happen all the time for various reasons. Sometimes the market, when it gets very extended, you're going to see that it's screaming for a reason to pull back. And sometimes we really don't have that reason to pull back, but the market is really trying. I mean, I don't know if it's the market or the analysts that are trying to find a reason. Ooh, market's in turmoil, no stimulus. That's why the market is pulling back. Or like, ooh, there was like, I don't know, this and that happened. Ooh, no mask in Texas. Oh, that's why the market is. So they like to create events around the market stages, but the market has always worked in stages. The fact of the matter is that when the market is getting elevated from any kind of support level, or when it's tapping into extension level, because remember, even if a stock is trading into all-time highs, remember that there are indicators out there that you can apply towards price action, and you can find out the exact institutional locations where these institutions may be scaling out of those trades. So focus on companies that have thrived again and survived over the years. This is so important, like the Home Depots, like the Walmarts and Costco. I think Walmart and Costco is going. Walmart, I think, is very hot right now. Don't forget that Walmart, for example, is seeking approval to become a bank as well. So that's going to be like wild. So it's a huge retailer. It's going to, it wants to compete with Amazon with their online store. And also now with the banking, I mean, this is going to be big. Look for stocks that have really good value, like, like I said, 3M, like, stocks that are really performing well, and stocks that, have very strong fundamentals. UNH, for example, or even Disney. Disney is a little bit more flaky because is the park open, is the park closed, is this and that. And, but anyways. So, and also another tip would be to be diversified. It's very important to be diversified. Don't put your eggs in one basket. So for example, if you want to trade financials, don't trade JP Morgan, Bank of America, and XLF, because the next point in time when there is going to be a sector rotation, and when the financials are going to get dumped, and the money is going to go, for example, into tech or whatever, then these are going to sell and your account is going to take a hit. So you have to have a really nice balanced portfolio, because when stocks rotate, they go down. And then if you have the stocks that the money is rotating into, then those are going to go higher. And that's where you're achieving your conservative growth. Stay away from high risk industries like airlines, hotel, biotechs. It's fine if you swing trade short term, but they don't make really good investments. And also follow the prints. The prints are very easy to read when you have institutional moves into them. You don't need any sophisticated indicator. You don't need to see, where, of course, it's great to see reinforcements of some unusual activity, or some increase in buying power, increase in buying, or block trades, or whatever it may be. But the reality is that institutional traders, because guess what? They are respecting technical analysis, like I mentioned at the beginning of the presentation. Guess what? They're looking for the technical pattern and for the rotations. And this is what we teach in our classes. So they focus on cycles. Institutional buying creates, obviously, the follow through. Institutional buying occurs during strong uptrends, on technical pullbacks, key areas for accumulation, because they want to go into these value stocks. The buy zones provide clear buyable points and prints. So let's talk a little bit about when we talk about investing, types of stocks, right? We have growth stocks. Growth stocks are usually in new or fast growing industries and have the potential to give shareholders greater returns. However, they are the most volatile class of stock and may just as likely go down in price, right? Also, we have value stocks. Those of companies with growth potential that are currently selling at low price relative to their intrinsic value. It can take time for their true value to be reflected by their price. We have income stocks that are generally not expected to appreciate greatly in share price, but typically pay steady dividends. I'm going to show you some examples. I hope we have a little bit of time. I have a whole list of dividend stocks because it doesn't matter whether the stock is going up or down or is doing nothing. All you have to do is have a good chunk of money into them and you're collecting that sweet dividend. And I do have a lot of stocks in my portfolio that are this way. And then we are looking at blue chip stocks. These are really good stocks of large, well-known companies with good reputation and strong records of profit growth. They're considered safe investments as they generally generate dividends. Here again. And then you have the penny stocks. Well, penny stocks, I don't have a too good of opinion about penny stocks. Inexpensive but risky speculative stocks issued by companies with short or erratic performance histories. In fact, it is reflected on their technical charts. You can see a big spike up. Take a look at, some cannabis stocks. They had a growth potential, let's say, I think it was in 2000, and if I'm not mistaken, 2006. I hope I'm right. Or 7 or something like that. And then they pull back down. Okay. And then they had another spike. So as cannabis stocks were legalized in certain areas, and the big spike was produced when the first state, Colorado, legalized cannabis. And that's when they pushed higher, but then surely they fizzled out and they came back down. So be very careful with these penny stocks. I don't trade penny stocks. Well, I cannot say never because I do look at those as well, but it's not a focus. So when it comes to trading, no one has a crystal ball, and no one had a crystal ball. It just worked 95% technical and 5% is fundamental. I want to share with you here. It happened last week. It was the happiest day of my life, literally happiest day of my life. This is GameStop. I taught last week, I taught the Power Income Futures Day Trading course. We started the course at 2:00 and I opened the trading, I opened the room, the education room, the classroom, and I looked at the charts. I had an alert on GME at $53.50 right here. And during that day, it was meandering because you could see that on that very day, it pushed lower. So it was, trading way below $48 or $46. And as I entered the room, I saw my alert go, and I didn't really have enough time for position sizing. But what I did is I just grabbed 1,000 shares of it. And I literally didn't have time. So the class started at 2:00 and the trigger came in at 2:02. And all I did is I had my active trader. I just clicked on it. I didn't have, so I couldn't send it to my followers. I couldn't send the message to my followers, but I feel guilty for that. But hey, if you know how to trade, you know how to find your trades, and you make your own luck and you make your own trades. So I bought this at $53.50. That night, I got out at $180. Okay, call me paper hands, but I am not going to give back a 3-figure profit on it. So this is GameStop, and it's all happening. I don't care what it says about, who's forcing it up, if hedge funds were in it, if Wall Street bets guys were in it, if Reddit guys were in it. I don't care. For me, it was a technical pattern. It came in with a lot of volume. You could see the volume that came in here. It was a rotation. It was a technical 3-candle pullback into the 20 SMA on high volume. I was in. I got in. Okay. I got in. Okay. Well, we're going to take a look. Don, we're going to take a look at it. Okay. So this is literally the biggest gain for this amount of shares. Okay. So obviously I had better gains in my trades, but this is with 1,000 share and it happened in record time in one day, literally. So it went from $53 to $180, boom, in one day. It was phenomenal. I never had a trade like that. Never had a trade like that. Never. Okay, here's another trade that we had. We called this one last week. Okay, we called this one last week. It was on Friday. I think it was on Thursday or Friday when we called DKNG long, and we called it long at $61.85 officially in the program because I wasn't teaching, right? Okay, so I'm really glad that I took the trade because otherwise I would have been so mad, so mad. So $61.85 was our entry, $55 for the risk exit. We exited today at $72. Okay, so as you can see here, it went up like crazy. We made over 17% into the trade from entry to exit, 17%. This is with 1,000 shares, $10,000 only in this trade alone. So you can see that there are so many opportunities into the market. Here's another trade that we got in, and this is also a Reddit kind of trade. Thanks, Sue, so much. Yeah, it was. It happens. It happens. Trading is not always like this, but trading is about huge wins, home runs, right? It's about small wins. It's about break-even trades, and it's about small losses. That's what you need to do. If the trade does not work for you and it doesn't fit your parameters, and if it reaches your stop, just cut it. Just get rid of it, and don't stake into it. Don't try to save it. Just cut it and then go back into a different trade. Okay, or if it sets up, don't abandon the trade. This is SNDL. This was, again, one of the biggest moves that we had for the month of February. You can see it here. This is our entry. We actually entered at not 99 cents, not 95. We entered at 99 cents. And we exited this trade all the way into the highs right here, like $3.50 or something like that. It was ridiculous. So we had huge, huge movement. Now, see this line right here? We have bullish above. This is a watch this week. If this stock, SNDL, is going to get over $1.64, it is going to go back up, okay? At least a profit target of 225, and then it's going to start going to $53, okay? So it's trying to regain the trend. You can see this pink line right here. This is the 10 exponential moving average. So it's trying to rotate and go higher. This is a beautiful doji decision point into a key spot. Plus we have minor support here into $1. Okay, so this is the trade idea. It's over $1.64. All right, so when to enter the trade, focus on the cycle, the buy, sell, short pullback, and select the ultimate entry that will generate the best reward. Entries are early points within a potential leading stocks consolidation or reversal from a correction pattern. You want to look for a buy pocket. See here, this is like a buy pocket. So this is like a little, because when the price is going to start moving, let me just take my cursor real quick here. So when the price is going to start turning around, let's say this candle is going to be green, it's going to take away that, it's going to take out this high here, it's going to start continuing higher. This is going to be a really nice buy pocket. So this is what I mean by buy pocket. So I want you guys to understand what I mean by that. This offers both a way to get on board strong leaders later in their uptrends, as well as extremely reliable and powerful tool for adding to positions when you are in a trending trade. So for example, you have a trade that goes like this. All right, that goes up. Okay. All right. So let's say you get in here. Okay, but you decide to hold a position as an investment or as a swing, and if it's a power trend, it's fine. You can trail it by pivots. So you're looking for the price to go up, and on the pullback, what you are going to do on the next rotation, let's say here you get it with a quarter, okay? Because typically when you're looking at a trend and the trend is already a little bit extended, then you're looking to get in, small, and then you're adding another quarter here, and then you're going up, and then on the next pullback, if this pivot is above this prior quarter here, okay, and then you add another quarter here, okay, and then here, that's why you build on your position as the price is going for you and not against you. And this way you're in with full position. But think about this, you got in here, the price is now here, so you made a whole lot of money. So you made money from here to here, then you made money from here to here, then you made money from here to here. It all adds up super fast. So that's why I said you don't need a lot of money to make money into the stock market. You don't, okay? So get started early. Okay, yeah, this is the kind of example that I sometimes post on Twitter. This is an older example. I'm going to show you some new examples that we had now. I'm going to share with you the best 10 growth stocks for 2021 that should always be on your watch list. That's Amazon, Facebook, Google, FVRR, Work, Microsoft, ATVI, and the rest. Well, I'm going to send you guys in an email because I want to keep you, asking what are the, keep on asking what are the what is the rest of the list? I wonder what the rest of the list is. So I'm going to keep that option open for you, and you may be surprised. Okay. All right, so how to choose dividend stocks, okay? So dividend stocks are really, so again, most of the dividend stocks are within Dow, but they're into the S&P as well. So select them based on strong patterns and of course, strong dividends. For example, IBM pays $1.63 a share, Home Depot pays $1.50. So if you're an investor and even if the stock is underwater, you still get paid for it, okay? So you still get paid, so that's awesome. Think about it. If you own like 10,000 stocks of Sirius Satellite, right? Because Sirius Satellite is very cheap. Or if you own, I don't know, something that is better in price, like Verizon, right? So these are some of examples. Whether the price is going up or down, you still earn a dividend. So here's something very interesting. Evidence indicates that day trading too actively can be a major drag on performance over time. Why? Because a lot of traders are focused on day trading because they think they could go in and out, fast enough and they can make money. But the reality is that day trading is really precise right now, and you have to be in sync with the algos and you have to know exactly what you're doing. According to different studies, short-term traders generally achieve lower returns than swing traders and active investors. Research done at the Graduate School of Management at the University of California. So here's the number one mistake in trading. The traders that only look for stock picks will always be part of 90% of traders that fail and lose money, because you need to know exactly, in order to have confidence in your trades and say, oh yeah, I'm going to go long 3M. I'm looking at the technicals. I know the fundamentals. If you follow someone that, if you know what you're doing, yes, you can follow someone and you can easily determine whether that, person is baloney or that person is a real trader. But it's always a great idea to know exactly what you need to do. You must dive much deeper to succeed. So if you want to have your money work for you, don't trust it. Don't trust someone else with your money. Okay. I would not have a hedge fund, trade my money, because look at Melvin Capital. They did. They were adding to their shorts in GME. Like, you don't want to be with Melvin Capital, right? You want to manage your own money. Look what happened with, what's his name? Oh God, he's in jail. What's his name, guys? Help me out here. Something with M. Anyways, I forgot. I'm gonna remember and let you know. Madoff. Thank you. Thank you so much. Yeah, that's right. Okay. So yeah. So see, like you really want to manage your own money, and you can do that. It's not impossible and it's not hard. Swing trading is the easiest way to get into the market. The biggest component is understanding the trades And this is going to generate confidence, and it's going to generate winning trades. So the skill will last you literally a lifetime, because guess what? It's just like riding a bike. Once you learn how to do it, you're just going to get better at it. Don't rely 100% on a service. Learn how to trade. I don't care where you're getting your education. There is so much information on the internet right now. You can probably figure it out. It's going to take you some time, but if you want to fast track, I'm pretty sure you can find some courses that you can take that are going to fast track you even faster. And trade, start with paper trading, but don't get too comfortable in paper trading. Move to a real account and start trading with one share, because you need to have some skin in the game. And when you have skin in the game, that is when you learn how to do it. Recession-proof skill. Hello. All of us traders made a lot of money last year into the market. It's a recession-proof skill. Pandemic, epidemic, whatever it is, we don't care. You know, recession, is it a financial crisis? Is it a whatever, how the housing market? I mean, this bubble with the housing market doesn't really smell good in my book, but I don't know if there is something that is going to happen into the market. Remember, the market is always going to be open. Even during the worst pandemic that we had last year, the market was fully functional electronically. So there was nobody on the floor. So it proved that it can function electronically. You can trade from home. You don't have to travel. Take it from me. I was traveling 3 hours or more a day. It took me about an hour and a half to go to work and an hour and a half to get back. And we were holding, we had our clients were high net worth clients, and we had a lot of physicians in our hedge fund. And guess what? We were doing presentations. I was doing presentations for them, you know, how to invest, you know, where to invest, just so we can get them as clients and trade their 401ks and all that stuff. So I was doing presentations for them at 5 o'clock, because that is when they would have their first break. The overnight, the doctors that were on call, that was their first break, and that was when the shift would start. So imagine, so I was waking up at 3:30 to be there at 5 o'clock already ready for the presentation. And then I went to work, right? And and looked at markets and all that stuff. So I decided, it's like, hey, I'm doing all that stuff. You know, why not do it for myself? So you make money while other individuals are waiting for their stimulus checks and unemployment. So that's really sad. So you can imagine, like, there was this whole discussion since last year about the stimulus check, and it's still unclear, right? So 10 ways to generate income and swing trading in 2021. First of all, let the chart do the talking and guide you through the trade, and be very patient. Pay attention to technicals, patience to wait for the pattern to form, and have that risk level already set. Select the proper time frame for each style. So if you're swing trading, the best idea is to trade the daily chart correlated with the weekly. If you're on a little bit higher time frame, correlate your monthly with the weekly charts, and become a good technical analyst. It's not hard to be don't be intimidated by technical analysis. Technical analysis is relatively easy. What is hard is our brain is overcomplicating it. Keep it simple. Look for good relative strength, relative weakness. A good example was today. For example, Dow was holding, NASDAQ was weak, right? So pick something that, if you want to go long, pick something that is relative strong, has relative strength, because if you pick a stock with relative strength, then the trade is going to turn around and it's going to make money for you, okay? It's not going to be as weak and taken with the index that is following. And always go with the trend. Don't try to short something that is very strong. Don't be stubborn in trading and say, oh, wow, you know, this stock is so strong, or this stock is so extended, I'm going to short it. Maybe there's a reason why it's there, right? So don't be stubborn. And here's my game plan. I zoom into the bigger technical image. Always start my technical analysis, higher time frame, and I go to smaller time frames. I focus on trend trades. You go with the trend. The trend is your friend. I did not invent this thing, but it truly works. Like to trade runner-ups into earnings, but I don't like, I'm going to show you an example. I had a trade in FUBO, And in FUBO, when I took the trade in FUBO, this was a runner into earnings. It ran a little bit and then it faded. And then into the earnings, they reported earnings I think last night or this morning, I forget when, okay? So what I did is I exited the trade yesterday, okay? I exited the trade. I'm gonna show you the post that I sent to my traders. I exited the trade with a very small loss, okay? I do not hold swings into earnings, not unless they're options or lottos that are very rarely do. Zoom in on the technical time frame where your pattern is forming, because sometimes you have patterns. If you look at your chart, sometimes you identify a pattern that is on one time frame, but the other time frames are really choppy. Don't overthink it. Establish trading parameters, assess the odds, the risk, the position size, etc. Don't oversize, because you're going to have a lot of pressure. Okay, you're going to have a lot of pressure. You don't need pressure. You need, to be relaxed. You need to be stress-free, because otherwise, if you're overloaded in shares, you're going to mismanage that trade. And scale into targets always, always, always. Here's some rules. Always evaluate the environment. Now the environment is very choppy. Always evaluate seasonality. This is something that I don't take lightly. I really look into seasonality, and there's this website that I actually like. It's called equityclock.com. Look into seasonality. You can type in a stock right there, and you can see, the overall seasonality for the stock or for the index or whatever it is, or for a commodity. Earnings are very important, right? So I like to trade the stock before earnings. I typically don't hold it into earnings, not unless it's a investment position, and then I don't care about earnings because, I have a wide time span, so it can drop for 3 days or 3 months, and then in the next 6 months it could go back up. Be diversified. Use limit orders when you enter trades. Follow the overall market and industry group. And start small, guys. Start with one share. If you do not know how to trade, get your feet wet with one share. Remember this, you are not paying commissions, okay? You are not paying commissions. Don't get out of a good trade. Let the market take you out. So that means trail it. It's equityclock.com. Multi-time frame alignment has to be in sync. So trade the stocks that have relative high volume. Look for an increase in volume compared to the prior 2 to 7 days, because you want to see the institutional participation. Once you see the volume increase, you're going to see the chart starts to form and the pattern starts to form. That is a good indication that the suits are getting ready to step in. Trade stocks that have patterns of beating earnings. Look for fundamentally strong, solid stocks, just like Apple, right? So Apple always does that. It underestimates and it over delivers. Ideally, to trade stocks that are trading above the 20 or the 50 SMA. These are really good indications, because a lot of hedge funds or institutional traders are already using these moving averages. Look for confluence areas. These are overlapping key locations for multiple time frames, as they will generate high velocity for your trade. Stocks, ETFs must trade at least 1 million shares a day. I'm not trading any thin stocks. And sharp pivots have an increased risk of failure than rounded bottoms and consolidations. So successful traders are always prepared, are always educated. They mitigate risk. They learn from the failures, always adapt, and believe in accountability. And what do I mean by that accountability? So they keep a track record. I don't care if you have your portfolio, because some traders say, hey, you know what, but yeah, I'm positive in my P&L. It's like, I see that. No, you have to see what kind of, how you performed based on each quarter. So keep a trading journal. And unsuccessful traders, they just wing it altogether. Okay. So how you can turn 10 minutes of trading into a 5, 6, 7-figure trading account, or, nest egg, by education. I can't emphasize enough. You need to get I don't care if you do not join my programs and do not join my education. I just want you guys to get educated. Maybe you can do it online. Maybe you could do it, you could find materials on the internet, but make sure that you know what you're doing. And then fund the account. Have a trading plan. It doesn't have to be a novel. Just have a little piece of sheet, have a sheet of paper in front of you with the criteria where you're going to buy. Have a system, because if you don't have the system, the trade is not going to work for you. Do your homework, execute, never chase a trade, never chase a trade, never. So when you hear the word chase, run away. turn around, 180, run away. You need to get in on pullbacks. You don't need to chase the trade. So when you see the price already up, boom, let it go higher. Don't even look at it. There are 6,000 other stocks that you can look into, and also trail into targets. Let your winners run and cut your losers. So what I do is I scale into each target. And if, for example, I have a stock that is running beyond target, then the last lot I'm just trailing. That's it. Always be aware of the market conditions. And now profit and loss, I do have an example here if you guys want to go to my swing trader at the very bottom of the page. Okay, you scroll. Okay, not that much. And you have our swing trading performance. And you can see here that we have many tabs on to the bottom, 2012, 13, 14, 15, 16, whatever, up to 2021. This is 2021, by the way. And the results here, here's the results. Profits and losses are calculated based on the stock price from the entry to the exit. Okay, so that percentage, that's what represents. And the stock swing trader performance is cumulative total of gains and losses for the trades. So I just want to share with you real quick here. So take a look at these percentages. These are the stocks that we were in and I was in. I take all the trades. So this is January right here. Okay. And this is the performance. This is February right here. You can see this is, by the way, this is 2003, 203%. This is SNDL. Okay. We still have some open positions. Like I said, we closed the FUBO. This one we closed. We didn't update this portfolio. This is not updated. We still have open positions, and we update the portfolio at the end of the month always. Okay, so this one I need to update here, but still up over 214%. So you get the picture. It's an incredible result. And moving forward, if you have a desire to make trading work for you, and if you want to change the pattern you are in right now, I can work with you. We work with hundreds, thousands of traders. This is actually my workstation, my trade station. We can teach you how to trade. We can teach you the complete system from A to Z, how to focus, develop the skills set by following my trades, develop healthy trading habits, mentoring you on your trading journey. We do have an institutional system that we trade so you can find these high patterns, know how to identify buying and selling pressures, learn the power of multi-time frame alignment, which is a must. Learn how to maximize profits and minimize losses. Learn how to pick winning traders. Learning how to scan. This is very important. Learn how to scan and look for trades. Our program is called Wealth Generation, Swing Trading, and Active Investing course. So we teach you not only how to swing trade, but also how to actively invest into the market. It's called Smart Investing. So you are going to be able to trade like a hedge fund. If you're interested, we do have a class we do have a class that starts on Monday, which is completely sold out. And we have another one that is available and starts on April 5th to April 9th. So we only have actually 6 seats for this one. It's very popular and we don't have any seats for this. Like I said, with this class, we have an early bird bonus, and you're going to receive the stock swing trader program. So where we spoon feed you all the trades. Well, I do all the work for you. And you're going to get free access until December 2021. This is $1,800 that is waived from the program. The course tuition is $4,197. You can find it on our website. And if you think, hey, I know what I'm doing, I just want to follow your trades because I don't have time to scan, then you could join directly our swing trader, stock swing trader, which is $199 a month. It's part-time trading for full-time swing trader. And this is a program designed for stocks and ETFs. We have been delivering stock swing trades to members since 2010 for 11 years. We have members in our programs since 2010. I'm sorry, since 2010. So for the last 11 years, we have been doing this. It is a service for self-directed traders. We will teach you how to navigate the markets without being chained to your computer. Our approach is 95% technical and 5% fundamental. So if you're interested, you could head on to our website. And under education, we have a stock swing trader right here where we have the program. And if you scroll, you are going to have the course curriculum, which is right here. What we teach and the course inclusions right here. What you have, obviously, the 30 days access to the stock swing trader. Basically, you're going to have until the end of the year. So this is a huge bonus. You have position size calculator. We provide you with a platform layout. If you're trading off the Thinkorswim platform, we just sent you the link. If you're trading with a different broker, that's fine. We will provide you with a manual snapshots of how you need to have your computer set up with all the indicators and all that fun stuff. And then again, if you want to hop in and say, hey, I know technical analysis, I know enough to get started with trading, you could hop on to our service, which is the Stock Swing Trader. It is very popular. You have a full description here of the program. And you have the pricing at $199 a month. You have the swing performance right here. I think the results speak for themselves. This is it, guys. Do you have automated trading? GT, for the longest time, I was trading other individuals' money. I'm not doing it anymore. I'm just managing my money. So I used to have a managed accounts program. I don't do it. Minimum account balance. You don't have to have a minimum account balance. Like I said, you could start small and you can build your account. No, it's equity clock. Equity clock. Let me see here. Okay. Hold on. Let me know if you have questions, guys. Okay, here it is. It's equityclock.com. Equity clock. Profit club. Profit club. Yeah, no, it's not an equity club. It's equity clock. Okay, equity clock. Okay, sorry. Okay. All right, guys, this is it. Thank you so much, David. This is a wrap for me, and I think this is a wrap for everyone. Don't forget that all the events